Hello, everyone. This is Mike Berger again with NC Planning, bringing another Daily Counsel video to you. As always, if you're following us on YouTube, please do give us a like and a subscribe, as it helps out the channel a ton. And feel free to leave us comments for follow-up videos and things we can address. I want to take a little bit of different approach today, a little bit of format change, and invite on not just me or one of my law partners, but a good friend and business partner in the business community, my good friend David Bass. And David and I wanted to take an opportunity here to try to underscore some of the positives in business opportunity and rebuilding as we start to hopefully come out of the COVID-19 crisis. So just a little bit of background on David really quickly. David is the founder and an investment banker with Arena Capital Advisors. And David and his company specialize in the sale of privately held businesses. They've been helping business owners in the Triangle and surrounding area since 2003 evaluate opportunities and potential sale of their business. And David, I know you see a lot in the marketplace on a day-to-day basis. You're talking to folks just like we are. What can you share with us a little bit about some of the maybe silver lining or positive upside that we could hope to see possibly as we come out of COVID-19 pandemic?
Certainly, Mike. It's really a pleasure to be with you today, virtually at least. It's interesting, even though I represent sellers and help people sell businesses or plan how they're going to do it, it's really important to understand buyers and what buyers are looking for and where buyers' heads are at. And right now, activity is slow. It's difficult to travel. A lot of diligence needs to be done on site. If you need to inspect a company's offices or manufacturing facilities, now is not the time to be going there. And so things are slow, but there will be a resumption of activity. And I think a lot of what drives the buy side of mergers and acquisitions is the private equity world, both in terms of private equity funds buying companies for themselves, as well as helping the companies they already owned buy more companies and financing those deals. Right now, private equity companies are sitting on, I just saw an estimate updated today, $1.4 trillion of committed capital. And it's useful to understand that private equity capital commitments expire. So every time there's a period of slow M&A activity, like now, it's followed by extra pressure on the private equity fund managers to find companies to buy and get those deals closed so that the money doesn't disappear on them and become no longer available. Even while that is the case, it's also, I think, important for people to know that valuation multiples trickle down from public company stock price multiples. When public company valuations are high, the price earnings ratios, they are able to pay and willing to pay more to buy companies. And non-public companies tend to follow the lead of public companies because the largest ones are competing for the same deals. The largest private equity groups are competing for some of the same deals. And so they have to offer competitive valuations to what the public companies value. Obviously, right now, the stock markets are somewhere between 15 and 20% down from their all-time highs, and that will be reflected in the valuations. So even though there's a lot of pressure to put this capital to work, it would be a mistake to expect crazy valuations to be floated around once activity resumes again.
Yeah, I think those are excellent points. And as you know, and as we've shared with our viewers before, myself and my team at NC Planning, we regularly represent both buyers and sellers of businesses on the legal transactional side. And so I agree with your notes that, you know, we very well may see an uptick in M&A activity as we come out of this. I've had conversations with clients on the buy side who are interested in becoming buyers post-COVID and are already in the planning process to make sure that they have liquidity to accomplish those goals as we come out of this, because they believe there could be opportunities there on the other side. And I think it was really interesting to hear your note about the available private equity funds. I think that gives a little bit more hope to business owners that there could be even more buyers. David,
That's right, Mike, because after the 2008, 2009 recession, the same thing happened. There was a kind of a renewed surge in the activity for a lot of the same reasons then as are in place now, except now there's even more capital available to the private equity folks than there was before. And there should be more capital sitting with the public companies after the tax reform of a couple of years ago.
agreed. And for those reasons, among others, we have conversations with clients now about what should I be doing while my business is stalled or while we have revenues and activity down. And we have some discussions on the legal side, obviously, for transactional document cleanup or corporate record compliance cleanup. But what would you say to the business owner that maybe is thinking about what can I be doing productively for my business to quote unquote work on my business when I'm not working in my business as much, maybe from the standpoint of selling or otherwise?
Well, great question, Mike. So nobody's going to live forever. That's a fact. Father Time is undefeated. So nobody who owns a business is going to own it forever. And so when things are slow is a good time to kind of look ahead and really think about what's the value proposition of your company that would make it more attractive to a potential buyer in the future. If you didn't already own your business, or maybe if you were younger, if you can imagine that, would you buy your own company? If maybe more importantly, would you pay a premium price if you were buying your own company? Why would you pay a premium price? What is that value proposition? Or why would you not? And can you fix that? And also imagine if you were a buyer, where would you focus your due diligence efforts? What would you really laser in on? And are you prepared for somebody else to do that kind of diligence on your company? This is a good time to tweak business models. I'm sure that a number of the restaurants that are now offering kind of a curbside pickup alternative for their business, some of them will probably continue that and look for ways to expand that as they think about what the future of that business will be. And other businesses will probably want to do the same kind of thing. When I talk to buyers, people looking for a business to buy, there's a few things that come up over and over and over that they want. They want growth stories. They want to see top line growth, revenue. They want to see bottom line growth in the profits. They want to have a reason to believe that there will be growth in the future in the business. They really want to see capable management in place behind the owner. If the owner exits stage left within a reasonable transition period after the sale of the company, who's going to run the show and how capable are they? They want to see a diversified customer base. If there's a risk that a large chunk of revenue could disappear with the loss of a single customer or a very small number of customers, and obviously we see the kinds of things that have happened during this coronavirus pandemic, that's going to lead to a real downward push on the valuation because of the risk associated with that. And so this is a good time to be thinking about where do we get the kinds of customers that we haven't been getting that creates more diversification and thus less of that risk. A lot of companies, I've heard for years, a lot of business owners talk about things that they've thought about doing, the things they believe they could do to make it more valuable. They say, well, they should pay me more for my company because they could do this or that, but they haven't actually done it themselves. And the reality is buyers won't pay for what you haven't actually done. So the downtime could be a good chance to put together action plans for those kinds of things and then commit to implementing it as we come out of this slow period or this lockdown period. Another area to look at, which is never fun, is in addition to the legal, just kind of the accounting and other housekeeping and record keeping. Make sure documents are in order. This might be a good time to set up a secure virtual storage system for contracts and legal agreements. Make sure that signed copies are archived where they're accessible. We call that a virtual data room. There's a lot of different companies that are offering that service now. It's a good time to look at upgrading the monthly closing of the books to be as close as possible to the year-end closing. Um, the numbers are a whole lot more credible if you can show that the way you close the books at the end of every month is pretty close to the way they're closed at the end of the year, and that you can kind of quickly get to a closing that's cut off. I mean, here we are in April. In a couple of months, people are going to want to see your June financials, not your December financials from last year. It's a good time to look at developing internal checklists, whether it's a closing checklist or also things like training manuals and other sort of documentation of repeatable processes, where you can say, well, here's how the people who work here and the managers behind the owner can run the business themselves because they follow these repeatable processes, and that reduces the risk of error and increases the probability of having happy customers that keep coming back.
I couldn't have said it better myself. I agree with everything you said. I think it's a fantastic thought to take this opportunity to try to implement some of those enhancements for your business that you've been thinking about or talking about, and really commit to deploying those, as well as helping to clean up and take some time for housekeeping matters. Of course, we see a good amount of that on legal compliance, but we're also strong proponents for making sure your accounting house is in order as well. David, thank you so much for joining us today. I wanted to take a minute really quick to let everyone know, of course, the team at NC Planning is always standing by and taking calls, but in case they wanted to get in touch with you, I'm going to go ahead, if you don't mind, and share on screen your contact information. Does that work for you?
Yeah, certainly.
All right, so we're going to go ahead and share the screen here. If you need to contact David, of course, CEO at Arena Capital Advisors, LLC, and his phone number is there, email address, and he's local right here in Raleigh. So feel free to give him a call as desired, as needed. David, always a pleasure, my good friend. It's good to see you, if not just virtually and socially distanced, and hopefully we'll get together in person soon.
Well, likewise. Hopefully when things open up again, we can get together and enjoy some burgers.
Of course, always happy to, burger to supply burgers. We try to please. Thank you everyone for joining us again with the Daily Counsel. As always, we hope that you're staying well and staying safe, and we'll talk with you again soon.